people ask me, well, what's a portfolio do? Like, and I always say, well, they're not cookie cutter kind of portfolios
Mm,
that you may get in January 3rd, the end of January or the end of February, and the year may have been an amazing year, but those 2 months may have been the worst 2 months of the year, and so the 2 months following after you got in, and so it really depends on when you got in, the timing, which stocks you bought. There's so many things there to be thinking about, so many variables. The key is just to hang in there and look. That's the key, to follow it to a T. Don't deviate it. I used to I make a joke sometimes that when I'm talking to partners, you'll do great as long as you don't start thinking you're really smart. That's when you get in trouble. And so if as long as you don't do that, you're great, because what happens is you get this and it goes up, and you get this and it goes up, and it gets this and goes up. A year goes by and you think, wow, man, I'm really good. And you start to do things on your own. And I'm not suggesting that you're not capable of doing things on your own. It's just that you think sometimes doing things on your own means, I read a couple things and I like that stock and I'm going to buy it. When it doesn't mean that at all. It means doing all the research and doing all your homework. Every year, and I did it a day before the year was over this year, but I always look at my own portfolio. I have two institutional portfolios. I have four altogether, but two that are identical. And I look at those, and I look at my own portfolios, and it's always interesting to note that some of the positions that have done that were really, really bad 3 years ago. In my own IRA, I had an account. I had one position that was down 78% 3 years ago on my notes, and is up 127% at the end of last year.
yeah.
Which, I mean, that's a huge swing. It's a ridiculous swing, but that's not very typical. But um, the note was that I desperately wanted to sell it when it was down. I had it for 6 years, and it basically had done nothing. And I hadn't pegged it like just a dog of a stock yet, but I came real close to it. But the moral of the story is I didn't sell it, and it made up for that 6 years in a year and a half. And
Yeah,
so
that's good.
that it's just, and I always ask. There's a couple of stocks that I can think of off the top of my head. Um, Navstar, that everybody sold. Everybody sold. We bought that stock. I was all gun ho on this company, big time. And this was probably 7, 8 years ago, maybe longer. And they were the company that was going to change everything, because they had developed a tractor and trailer engine for a semi that was running on that gas, and it was a really, really big deal, and everybody owned it. Well, it came out that they lied, that they skewed the calculations, the numbers, and the whole thing was somewhat of a kind of a scam. And but I wouldn't sell it. I wouldn't let anybody sell it. I kept saying, they're going to get over this. I mean, this, I don't even know what it is now. I don't even know, but it was down to very, I don't know, $10 a share or something. and it came screaming back up, just in the last 2 years, 3 years. And that's a great example of why you stay in, why you don't get out. You're always it's all going to work out. It's always going to work out. It's almost, we can't guarantee it. We never say that. I know we can't guarantee because it's the market. You never know. Anything could happen. But
Right.
A bad company that doesn't go bankrupt is probably going to do pretty good. Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.